Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Chris Morrison, manager of the GAM UK Diversified Fund, to give his 3 stock picks. Hi Chris.
Hello.
So what's the first stock today?
I thought I'd talk about Morrison today, the supermarket chain.
Your namesake, and also a stock that has been in the news this week because they're stripping assets, aren't they? They're closing some stores. So why do you think it's a good stock?
Yeah, that's part of our thesis really. Morrison has done very, very badly. It's been caught up with the other food retailers, facing price competition from the discounters. But also Morrison, in a sense, created a rod for its own back. It moved away from what it was very good at, its traditional no-frills type supermarket, to trying to compete with Tesco and Morrison in opening up convenience and going online. And we see that as the opportunity now as they move back to their roots and what they're good at. We feel there's an opportunity.
And they're not threatened by the discount supermarkets that we hear increasing amounts of news about?
They are definitely threatened, but you have to marry that up with the valuation when you look at a stock. So we feel the changes the new management team have done are very material. They've completely changed the board, put a lot more staff into shops, and transformed the financials as well from a cash point of view, whilst investing in prices to try and compete to a degree with the discounters. So it looks interesting at this stage. Definitely not out of the woods yet, but yeah, interesting.
And what's the second stock today?
The second one is First Group, the bus and rail operator in both the UK and the US.
And why do you like this stock?
It's a bit like Morrison. It sits in the recovery camp as well. It's bought a very expensive, or it paid a lot of money for a company in the US just before the crisis. And because of that, it geared up and it really restricted cash flows from then on. And it's been in a period where it's underinvested in the rest of the business. And it's really only now where the new management team seems to have a grip on things. And they announced a rights issue, so they reset the financial position of the company and are really concentrating on turning around the 2 bus divisions. And if they can do that, if they can just get some improvement, which we're starting to see, then the shares look very, very attractively valued at this level.
And I suppose those types of business are very reliant on the domestic recovery in the country that they're in, because how much of their business is reliant on government contracts? You should say that US and UK are actually doing very well, so that may well be a positive thing.
Yeah, it's a balanced mix. Political interference makes a huge difference. So, for example, take Manchester, where the mayor or proposed mayor is going to take more control of the network, the bus network. So that will automatically have an impact on First Group. It makes the outlook more uncertain indeed. But that's something you definitely have to contest with one of these companies. And it actually goes back to the rail franchises they had in the UK, which very low margin business but act as a cash cow. So because of that, it almost masks poorly performing areas because you just had lots of cash coming out from this business.
And presumably inflation linked as well.
Yes, indeed. Yeah, exactly. So it's a good thing for them to have, but they've lost those now. So because of that, they've really had to concentrate on what they're good at and reset themselves.
And what's the third and final stock?
The final one is Centrica, the utility company here in the UK.
3 pretty punchy stocks, I have to say, for you today.
Yes, yeah, the first 2 are in the fund. This one isn't. It's one we're doing more work on and quite interested in. But that is the style of the portfolio to a degree. We have a recovery bias, but we have balanced that in more recent times with sort of more compounder-like stocks, if you like. Centrica is another interesting one, like you say. It's got upstream assets, so exploration assets and rigs in the North Sea, plus it's got downstream operations, which is British Gas brand, which is us paying the bill. Both have been very impacted by falling commodity prices, and at the same time negative sentiment around the British Gas brand and how much consumers are having to pay for their bills. But in a sense, Centrica had their crisis early, which we feel that they can emerge from quicker than the rest.
Chris, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.